are you? You look like you're, in the woods in a cabin.
I am. We the kids are off to school for summer, and the wife's a school teacher, so we took a little road trip. We're in North Carolina this week, and but the markets never sleep, so we're on location.
Very
That's
true.
true. When you're in the market, you're always on location. That's right. That's
How
right.
are you guys? What's new?
We're
Um,
doing well.
but we're doing
We're
well.
in
You
the
know,
process
market.
of, rebranding, relaunching our website. We're really excited about it. bktraders.com coming soon. So, we're very excited about, what's happening there.
Right.
And, for
Tell me,
those,
what is
sorry, my screen is,
content?
Sorry.
I'm
What?
sorry, what's that?
Is there going to be a change in content? What's the change encompass?
Well, the main change in Compass is that we have developed this whole library of proprietary members only indicators, and we really want to put that in the hands of traders. And we want them to be able to use the indicators. We want to provide ongoing daily live
Coaching and
streams talking
support.
about the trading
Right.
opportunities that we see in the indicators, pointing out the trade ideas that they could identify using the indicators. So it's going to be very cool, much more technology focused, and we're excited to
Awesome.
get it out. We're working hard on it.
Right. And
Cool.
the
Cool.
site
What's what's the launch date?
Um,
Like last week, right?
Oh, awesome.
it'll be soon. It'll hopefully after the 4th of July. But then after that, the other big piece of news coming up this month is going to be Trader Fest. My annual gathering of traders from best traders across the world. It's a totally free virtual trading summit that we do every Saturday. It's going to be on Saturday morning.
What day is
So
it, Boris?
it's going to be July 22nd. We'll be promoting it, pretty heavily in the next couple of weeks, but it'll be really, really cool. And the thing about this that's really neat is this time we put a huge amount of past content on the Trader Fest website. We even have a Trader Fest YouTube channel. So there's just enormous amount of unbelievably cool trading strategies, ideas, psychology advice that some of the best traders in the world have shared with us, that you can use, plus a whole bunch of stuff that I'm going to be giving away for free. So I'm very, very excited about that.
Well, Boris is
And
not
where can we
revealing
find
the
it?
most
Can we link to
exciting.
it through the website?
It will be ready next week. So we just, I'm just kind of, I'm
Okay, great.
pre-warming everybody
Great.
to it. But once with the promotion, the full stuff will be ready next week. Will be really, you'll be able to sign up, get all the free goodies that we're going to give away, tools, videos, everything. So it'll be all ready.
And the topic
Awesome.
is AI and trading, which I think is very, very cool. And we have amazing guests. We have a market wizard. We have Trader Nick, humble trader. Very big names.
We have some
in the
really, really great
space.
people.
Karen Fu
Austin,
is speaking.
Austin,
Yeah, Karen Fu. These people, Karen Fu.
Oh,
Austin
nice, Karen.
Booker, as well as Rob Booker. So lots of really
Nice.
popular names, and we think it's going to be very, very valuable, especially since AI is so it's becoming more and more prevalent in our trading industry. And we've used AI to build some of our indicators, and there's so much to learn. And we really want to put that information into everyone's kind of radar, because it's only going to get more and more popular.
Yeah, exactly.
Absolutely.
So
Absolutely. We hear more and more every day.
Right, very excited. So hopefully, everybody who's listening, everybody who's around, everybody at Surge, the whole Surge family we're welcome
And
to come join us.
if you want to stay on top of it, just follow my Twitter. My handle's right under my video, Kathy Lean FX. When we get details on it, when the page launches, you will be the first to know.
Yes.
Awesome. Send us the links. Also, we'll embed the link in all these videos so people know how to get to it.
Absolutely, we will, because it's going to be a very, very special event. Much more richer than some of the past events we've done, where we've had some really great events as well. But this is just going to really.
Well, why don't you give your Twitter handle so they know where to follow, Boris?
Yeah, my Twitter handle is FXFlow. I mean, on the sign in, like, as far as I forgot to put it in on my thing. I'll do it next week. But my Twitter handle is FXFlow.
So, if you want to know when the event's happening and where to sign up, that's where you find it.
Exactly. Exactly. We're just warming you guys up because we're so excited we can't even stop talking about it. But by
Awesome.
next week, by next Monday, we should have everything ready for you, and you guys can start signing up. And there'll be a whole bunch of stuff you'll be able to get for free before the event that we're going to start sending you. So some really valuable stuff, which we hope is going to make it very special.
Guys, outside of AI, are you going to have anything prop specific?
So a lot of the stuff will talk about how you could use these things for for prop trading as well. Yeah. And
Okay, great.
and literally everything that we're doing is always focusing on the idea, how can we take these strategies and make them viable for prop? As a matter of fact, every single strategy I'm making now is what I would call prop ready.
Prop friendly.
Prop friendly. Right, exactly. And that's
I mean, trading is prop. So I think anything and everything we speak about is relevant for prop traders. So
for those of you who are listening, and those of you who are part of Surge, who come hang out with me every day in the room, you know that literally my whole live trading is all about how we're making money for prop today. That's literally what we do. We focus on strategy, structure, risk, and execution. All of those things, and
awesome.
we're doing really well.
And if you're not hanging out with Boris in the room, you should, because if you use our discount code, which you can find it's like BK4X 10% off the symbol.
Yep.
You can get a 1-month membership with BK if you use that information.
Exactly.
Correct, and that's in the description of the video as well, guys. You can find it in the description. You can find it on their website, on our website. Just take a look for that, and there's some valuable information there.
Just to give you an idea, we started a new $100,000 account last week, and we're up to 5% already. So
excellent.
So that's
Beautiful.
We're trying to get to that 10% magic number, and that will hopefully work.
And that's the one you're trading every day in the live room, so they could actually see you trading a prop audition in the live room.
They can see the trades, but they can see every one of those trades in our Discord. Everything everything gets fully transparent. They can totally follow everything really nicely. Yes.
Excellent. So Kathy, we missed you last week. What do we have this week on the docket? I know there's some numbers coming out and some inflation reports coming out.
Well, first and foremost, Corey, it's month end, quarter end, right? So month end, quarter end is very important. Quarter end is obviously more important than month end. And the reason why it's so important is because, a lot of mutual funds, hedge funds, they show the results based upon month end and quarter end, right? So that's why, when they're in profit, they've made money, or they don't want to lose more money, whatever, they want to, mark to market. And so they want to, lock in those profits. And that's when we tend to see some, movements in the markets that are not related to how the rest of the economy is doing, how data is doing, what central banks are saying, none of that stuff. It's just related to what we call portfolio or, just position rebalancing.
Yeah, rebalancing.
And this quarter in particular, as you may know, the S&P 500 did very, very well. The S&P 500 is at its highest level since, I think it was like April 2022, from what I saw, somewhere around there. But basically, it's performed very, very well this quarter. So, these hedge funds and mutual funds are motivated to, book their profits, show their results. And that is why, typically, when we have such strong performance, and this is also if we have weaker performance, in the last week of the quarter, and especially in the last, so we say 3 to 5 days, maybe more so in the last 3 days, you tend to see stocks fall because they're taking profits, they're booking their profits, they want to show their results. So that is something that I think all traders have to be mindful of, which is seasonality. We're at the quarter end, the seasonal, because we've had such a strong move in the S&P, the seasonal driver would be to sell stocks. And if you're trading currencies, we talk about often how currencies have a correlation or relationship with equities, stocks. So if you imagine that stocks are going to be under pressure this week, or more likelihood of being under pressure because of quarter end flows, then that should also tell you that there's a greater chance that we'll probably see currencies under pressure as well. So, that I think is very, very important to be aware of, Corey, because, seasonality is a very big story. Earlier this morning, Dow futures were up, but it can't fight the pressure of seasonality and quarter end flows. Now they're down again. So I think stocks are going to trade with a heavy bias this week. I think that is going to lead to currencies, particularly things like the yen pairs, which are much more sensitive to equity flows, also trade with a heavy bias. And then, at the start, you kicked off by saying it's inflation week, and it is inflation week. That's the second thing. We've got inflation numbers from the US, from the Eurozone, from Canada, from Australia, and Japan. Now, the U.S. inflation number is basically the PCE deflator at the end of the week. CPI, Consumer Price Index, gets all of the limelight, but really, the Fed likes to focus on the PCE deflator, and that's their favorite inflation measure. So that's coming out at the end of the week. The market is pricing in one more rate hike, and maybe even two. The Fed's telling us that they could do as much as two. But what's interesting is that the equity markets is not necessarily, and even I guess the FX market a little bit, but equity markets definitely not, are not pricing in the impact of two more additional rate hikes. So if that PCE deflator is hot and it kind of reinforces the case for another one or two rate hike by the Fed, you're probably going to see a deeper correction in stocks, which should lead to a deeper correction in the currency market. Also, the Eurozone inflation data is very, very important because Eurozone data has been terrible. Eurodollar has been surprisingly resilient, still holding 109, ignoring the German IFO report this morning that was terrible, ignoring the PMIs last week that was terrible, ignoring everyone's concern that the ECB is raising interest rates when everything is starting to contract, which is raising red flags about inflation. So if those CPI numbers turn out to be weaker, that could be what is the nail in the coffin for the euro and really drive it lower, because it may say, wait, hold up, ECB, maybe you really shouldn't be raising interest rates because inflation is easing. I'm kind of bearish euros. I think that's what the data is going to show us. And the last thing to be aware of is we've got a lot going on in Japan. Typically we don't care so much about Japanese data like retail sales, industrial production, inflation numbers, but this month the inflation numbers are also very important because the Bank of Japan is also at the cusp of possibly making this major shift in their yield curve control. And also, the Japanese yen has been very, very weak. Dollar yen rose to its strongest level in a year, which means the Japanese yen dropped to its weakest level against the US dollar in a year. It is at multi-year lows against the euro, sterling. It is at a record low against the Swiss franc. All of this invites Japanese intervention. And the Japanese have already suggested that they're uncomfortable with the yen levels. I don't know if they're really ready to do BOJ intervention, but you never know. We're obviously at very weak levels in the yen. But the mere talk of intervention, verbal intervention, jawboning, oftentimes will lead to increased volatility in the yen, like some of these unexplained big moves in dollar yen or yen pairs, especially during the Asia session when these Japanese officials are awake. That means that you better make sure that you either have wider stops or keep a tighter leash in your positions or have smaller positions overnight, because this jawboning could really blow out your positions. You'll be like, what happened? I didn't know that they were going to talk, but you should have if you watched our live stream, because I'm warning you right now that intervention risk is getting to serious risk these days.
What's the precedent for actual intervention from BOJ?
Well, the basically, it needs to be, the yen needs to be, okay, let me correct this. The Japanese prefer to intervene when the yen is strong, not weak. Because if you think about it, they are an export-dependent economy, right? So they don't want their currency to be strong, because if the currency is strong, that means that the goods that they're selling are expensive. So they're much more intervention happy when it's the other scenario, which is that the yen is too strong. So now the yen is weak, which, they're kind of basking in, sell more goods, their stuff is cheap, they're feeling good about it. But at the same time, the downside of it is that a weak currency is inflationary, and inflation is becoming more of a problem. But inflation is less of a concern for them because they've had very low inflation for a very long time. So they're less intervention happy, or they're going to push the trigger button far slower when the yen is weak than when it is strong. But they could verbally intervene. They could say things. They're already saying things that, they're uncomfortable. They're watching it. Their language should get more stronger, because for Japanese businesses, a weak currency is, for businesses that are trying to buy goods abroad, a weak currency is obviously bad, right? Because it costs much more. It's much more expensive to buy something from the U.S. when your currency is weak. So they kind of have to manage that, and that's why we're at a sensitive time. I mean, I could do a
Interesting.
whole video on this.
Yeah, no, the insights were phenomenal. Thank you.
Yeah, but it's a very good question.
So are we sitting it out? Or what's the play?
Well, what's the play really is, first of all, like I said, you better be careful about your overnight positions, because verbal intervention, even if it doesn't turn into real physical intervention, can lead to 60, 70, 100 pip moves in dollar yen and the yen pairs in a blink of an eye for no apparent reason. So you either have to carry smaller positions overnight or have wider stops, which is obviously trickier, in case that could happen. Now, the other flip side is, I started off saying that, maybe I didn't say it, I don't know, but I think dollar yen is due for a correction, because I think stocks are going to correct, and I think that the yen is at a cusp of turning point in BOJ policy, and because we are at the risk of intervention. So the other play is, probably short dollar yen this week. I mean, I like selling it to the downside.
All right. Awesome. Maybe we'll pull up a chart in a few minutes, take a look at it. So
Yeah.
last week we had you weren't with us, but we had a big attitude shift from Boris on U.S. equities, and
That was my call, right? I think that was.
Yep, absolutely. So where are we this week, Boris?
Still negative. I'm still, I said, got to be very, very cautious. I said, sort of the longer term trend is higher, but we're going to be in a corrective mode, and we were in a corrective mode. I hit the correction really, really well, right? I think it's going to be sell the rip rather than buy the dip structure. Although, as we're sitting here right now, I'm trying to buy the dip as we talk. But just for a small scalp. But generally, there's obviously, first of all, a huge amount of overvaluation, and sentiment move. Sentiment was very, very negative. Now it kind of shifted to a little bit more positive. I do think I listened to Bob Elliott, who's a very, very smart guy who used to run macro at Bridgewater, and now runs his own macro firm. And his whole view is that essentially it's kind of a muddle through structure, that there really isn't anything, including commercial real estate, all of the stuff that everybody always kind of just talks about as major economic factors. There isn't anything on the economic factor that is truly negative, but he did think, and this was interesting, that the Fed is going to have to go for higher for longer. And I think this week is going to be very, very. His whole argument was that PCE and wage growth are going to keep inflation at around a 5% nominal rate. And if that's the case, then then you're not going to be able to have the Fed ease off the pedal. So I am a little bit more dubious about that. I mean, his argument was that there's just still so much demand in the services sector of the U.S. economy that it's almost impossible for the economy not to pop as far as inflation goes. I'm not so sure. I'm not so sure. I think a lot of the demand has really cooled off. So we'll have to see. But I thought it was interesting. The whole point is that the economy, I think, is much better and much more insulated. There's 3 points he made. He said that basically surveys are useless because they're completely polluted by political bias. So if you look at the University of Michigan survey, people think we are in literally 1930s depression. And if you look at their actual spending, they're basically like in 1990s go-go times. So he said you have to completely ignore all the sentiment, including ISM services, ISM manufacturing, because they're all in a way sentiment things. He did say that the other thing that's interesting is that interest rate risk, which is what everybody is always worried about because the Fed has raised rates so much, is actually minimal because most companies and most individuals, 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 most indivi are operating under a very low interest rate environment. Like, my house is a 2.75% rate. Kathy's is a 3.25% rate. Most of the mortgages
How
are
do
locked.
you even know what mine is? I never told you.
I'm guessing. I'm just using it's an allegorical example. But the point is, that most, I think, like 80-90% of mortgages are locked in at very, very low rates.
Right.
That's actually creating the whole bottlenecks in the housing market. Nobody's willing to leave their house. But regardless, the point being is that the higher interest rates are not having nearly as strong a negative impact on the real economy as you would think they are, and that's why you thought the economy was doing well. So that was an interesting over the weekend analysis of the macro.
Interesting.
Yeah.
Interesting.
I don't have as beautiful a rate as Boris because Boris bought before, right at the pandemic,
the first time,
and I bought after my new home after the pandemic. Actually, only last year. So interest rates, are definitely higher than what Boris had.
Okay.
Awesome.
Anyway.
What's your play this week, Boris? You want to pull up some charts?
Sure. We've actually done a couple of interesting things technically in the room that.
So Boris is sharing his charts. There's a bunch of you on the Twitter live stream. I suggest you click on that YouTube link that I have embedded under the Twitter live stream feed so you can look at our charts. I'll show charts later too. I'm going to run through my heat map. So make sure that you switch over from the Twitter spaces to the Twitter live stream because Boris has got his chart up. He's going to zoom in, right, Boris?
First order.
So we can all see a lot. That's great. That's good.
Okay. So before we talk about actual positioning and everything else, I want to talk to you about the fact that for those of you who want to come join us at BK, I kind of did a huge amount of technology upgrades on a lot of the indicators that we use. This is the bread and butter indicator that we use in my live trading called Bounce, and I've done what I've done essentially with this indicator is I've added a whole bunch of really interesting ways for us to look at the market. So if you click on the inputs tab, I've literally created 4 different strategies of how we can find tops and bottoms or continuity trades. So there's this market condition, which is what this is. The trade now is showing you if you were trading continuity, that's selling lows or selling below the midpoint, basically going with a trend. But you can also, this is very, very cool, do a reversal trade, and you can see that actually over the last couple of days, reversal trades have been money. Selling the tops right over here, money. Buying the bottoms, which is what I'm doing right now, is going to be money. Trust me, it will be money. What's very, very cool is that this indicator now is a completely two-way indicator. It can show you when to buy tops, sell bottoms, show you how to go with trend. It can also show you if you want to do it fast, which is the market way, or if you want to do it slow, which is using the RSI as a filter. Very, very cool. And more importantly, here's the thing that I want to show you. Let's just go to the one that generates the most signals. The thing, it obviously generates a huge, this is a 1-minute chart, for those of you who are degenerate traders like we are and we trade a lot, you don't have to use this, you can go in a much longer time frame. But the cool thing I was going to show you is, in addition to this, if you want to see, it shows you the trade itself, right? The sell itself. Closing means that the green close means it's positive. But if you wanted to also see what the actual stop on the trade is, you can actually go now into the style condition and say display stops on labels, and click OK, and it'll right away you see it tells you to stop. So it tells you sell 14.18.6, stop is going to be 18.44, and of course all the stops and targets are adjustable. We're trading with a 30-point stop, 30-point target intraday. But it just gives you enormous amount of the kind of granularity that you expect from a strategy out of nothing more than an indicator. And by the way, just to let you guys know, I am long this thing. I'm long NASDAQ right now on this reversal trade because I told you it was going to be long at around 94. I'm actually long a little bit earlier. 22. I'm in at 27, so I'm a little bit earlier. The target is going to be 57, and we're almost at 47, 48. Let's see if we're going to hit the target. But just to give you an idea what we do all day long to find really high probability trades. that make a lot of sense. So before we even talk about charts, I just want to tell you that there's a whole big technology upgrade to what we're doing that's going to make it even better for you to be able to
Boris,
analyze.
let me ask you a quick question about that. How much of that technology upgrade did you use implementing AI? I know you're a big fan.
All of it. Yeah, all
Awesome.
of it.
Awesome.
ChatGPT is my best friend and my teacher. I literally couldn't have done this. I mean, the beautiful thing about this, you have to understand is, and all my programming friends would get mad at me, but let it be. There are two types of people. There's traders and there's programmers, right? That's how it's always been. And of course, programmers are super good at knowing how to program, but they don't have the kind of intuitive feel for trading that traders do. And traders have always been terrible at programming because it's a very meticulous, it's like literally learning a foreign language to be able to program well. And they've never been able to kind of take their concepts and make them real. And what ChatGPT has allowed me to do as a trader is to apply all of this, programming rigor and create, as you can see, really interesting, really cool indicators that are based off of trading knowledge, off of pattern recognition, all of the domain expertise that you have as a trader that are then implemented in a very rigorous, systematic fashion. So it's a combination of the two that incredibly powerful. I'm very happy with it.
And realistically, how hard is it? Let's say somebody who has little knowledge of programming.
I will not lie and tell I had to do a couple of all-nighters to kind of you have to be committed. But once you get over the hump, and actually the thing about this, and we'll talk about this Trader Festival, I'll show it's less about it's all about your ability to talk to the computer. If you know how to ask ChatGPT the right questions, it actually becomes a lot easier. The biggest problem is just that you have to learn. That's what they talk about, how to prompt the computer to give you the information you want, to express what you want. And once you kind of master that, once you master the communication medium, the actual programming, I literally I'll write code and I'll get an error. And I'll just and you can just go right to ChatGPT and say, ChatGPT, look at this particular snippet of code and tell me, what did I mess up? And it will say, oh, sure, and here's your syntax error, and boom. Instead of, I used to be like, okay, I made a syntax error, I got to fix it. Now I'm like, I don't even need to bother. Why do I need to try to figure out where I left the comma? Let the computer tell me. It'll tell me in 5 seconds. It's beautiful. I mean, those are incredibly strong, new technology things that I think those people who are trading can really benefit from. But you don't have to program. We'll do the programming for you.
Sure, of course.
I'll give you the strategies. There is enormous amount of value just in simple stuff like what's on the calendar today. What are the big events? What's going on? All of this stuff can be delivered to you, in a very unique fashion. So we'll provide all of that information for you at TraderFest, and you'll enjoy it.
That's a neat programming idea, Boris. An AI financial calculator that kind of filters for you as it kind of learns what you're looking for.
Exactly. We'll replace you, Corey. No, I'm just kidding. You can never replace me. That's funny. I was actually talking to somebody today, and I was saying that everybody's afraid that the AI is going to replace everybody, and it's actually never going to replace anybody. It is an amazingly great tool. It is horrible at any kind of truly creative human activity that the richness of content, the richness of code, the stuff that you do, the ability to ask, really interesting follow-up questions, stuff like that. It's impossible. The thing cannot do it. But it's really good at making sure that you have the I's dotted and the T's crossed, which is, as a human being, I'm terrible at. And
interesting. Right. So basically, it makes the good better.
Yes, it makes the good, or it makes the bad good by
right.
Because I am always bad by just converting all that stuff. It's great at the little things, and God knows if unless you're a bureaucrat, who loves the little things in life? They're just
right. Of course.
And that's very powerful. It's for the first time ever we've had a machine that can actually do the dirty tasks for you in a human conversational tone, that's a step in a huge direction up. So by the way, just letting you guys know, you're watching this trade with me. 57 is my target, so we're getting close. I mean, this is actually 52 on the indicator. The indicator is going to hit target hopefully in the next minute or so.
So Boris, how can people get this indicator?
These people can get this indicator by joining bkforex.com and coming to trade with me for free every single day. This indicator is available to everybody who's in our chat room, and they get access to this as being part of the members of BK Forex. It is not available anywhere. You won't find it anywhere. It's not even published anywhere on TradingView, so it's hidden. It's a hidden indicator, and that's what makes it so powerful. I don't publish any of my stuff publicly. Well, none of the stuff that we trade with that I publish publicly. But absolutely, come join us. Where are we? 22:32. We should be there. How come this didn't hit me? There we go. Look at that. You see that? You guys see the little green button? We're done.
There you go, guys. Live in the flesh.
We are done, babies. We're done. Okay, I'm gonna.
Boris is truly the king of live trading, and as we said earlier, you can get all of this free by taking a Surge audition using our discount code BK4X, 10% off.
Exactly. So you guys get double benefit. You get a 10% discount as well as access for 30 days into the BK Trading, BK Forex room. So definitely take advantage of that. It's in the description of the video, guys. It's all in there for you. Boris, do you have any?
Right. Let's go through our usual suspects.
Yeah, please.
On a 4-hour chart. Let me kind of clean up the chart just a little bit so that we'll take off all the labels, because otherwise they're just going to be very, very annoying. And this, so we'll start. I think we should always start with our favorites, which is oil and gold. I've been what I call a modest oil bull. Let me just get a little bit longer here. Meaning, I've basically been a bull in the below 70. I'm a buyer below 70. I'm sort of buy to dip story in oil, and that's really worked okay. I mean, you can't make an argument that it hasn't worked. Basically, buying the dip in oil. See this? Look, this is actually arrows that we talked about a couple of weeks ago, where I said, these are all buy points. We want to be buying underneath the 70. The critical thing is the 64 level. We break this to the lows, the party is over. I mean, that's kind of like a global slowdown, global problems. I'm not the rabbit bull on oil. I think everybody who's been a huge bull on oil has gotten their head kicked in. But I do think it's a great buy to dip story, and it continues to be sort of anywhere underneath 70. It's buy to dip, traded out. By the way, speaking of which, so some of you may know Chai Girl, Tracy Short, who is very, very, very big on Twitter, and she was a former guest of mine on Trader Fest, and I actually found the video clip where she talks about how she day trades oil markets every single day, and I made a short of it, and it's going to be so next week when you guys, I'm not going to tell you where it is because I want everybody to sign up for Trader Fest, but I'll give you those links and you'll be able to see her strategy, which is kind of very similar to what I was doing, but she's got some really interesting secret sauce in there that is in this video that I really recommend for anybody who wants to trade oil.
Interesting. Yeah. I read her daily report. It's excellent.
Oh, you do? So, yeah, she's she is sort of the go-to person on oil. So it's really great that I found this clip where she really talks about her JD's trading strategy. Gold, we were just, remember, we've been like, gold is for the dogs, and it has been very much that way. Gold clearly double topped at the 2000 mark. It still hasn't broken anything. It's holding on to that 1900 market, and you can't get aggressively bearish gold. I do think that gold is still sell the rally trade. It's you definitely sell the rip. You do not buy the dip in gold at this point. There is no indication that gold is in any way, shape, or form bottoming. What you see is just making a very, very long-term topping formation, and could essentially maybe even come back and break the hearts of all the bulls and come down to the 1800 level, which would make me very happy because right after Bitcoin, my most hated instrument is gold. You know me, I am not a hard money guy. I am all about inflation and paper money. I still think gold is kind of a negative bias. Any kind of a pop in gold, probably this whole area now becomes a sell the rally area. Crypto, same kind of a thing. So crypto is kind of holding, but so this is on the daily chart. I will say this. Remember the one thing I did change my mind on is I was like, you can't really sell crypto anymore because it's kind of broken out above the
Right.
held to 25 and held to 30. And I think that's sort of it. Whether you like it or not, you have to respect the fact that it's holding the 30, and it remains really, really a strong. I mean, as a matter of fact, unambiguously here, that you have to say that the crypto. I'm just trying to grab this and show it to you. Hang on a second. Let me see if I can grab this. Problem with there we go. You see this? I mean, these are all higher lows on a since the start of the year. You can't deny the fact that crypto continues to be a slow burn to the upside, regardless of how you feel about it fundamentally. So you got to respect this move. This is really a buy the dip story. So if gold is a sell the rip, oil is kind of buy the dip. Crypto is definitely buy the dip at this point. Now, as far as FX goes, the most interesting story that I thought was on the calendar. I'm going to go to the 1 hour chart just to kind of show this to you. Hang on a second. Sorry. Let me go to this thing. This is British pound, and the reason why I bring this up is because our friend Jason Shapiro, who I talked about all the time, made this very interesting point. The way Jason trades tops and bottoms is he says you have a strong fundamental piece of news that's supposed to make the currency go up or the instrument go up, and it fails, right? So this was Bank of England raising rates 50 basis points, not 25, but 50. And at the end of the day, we had a failed candle. This is a 1 hour chart. We hit the highs and ended at the lows. And what's cable been doing that since then? It's basically been kind of dying. So I think this is an interesting thing. Now, of course, if we break the highs and cable runs to 28, basically my stop would be at around, let's say 28.75. But for now, it's an interesting build for a possible short and a breakdown to the long side, which is really, really counter to what I think the fundamental framework would be. But it's telling in terms of, I think, the price action, and I like this as a kind of a out of consensus trade that we should all be looking for. And I also agree with Kathy that dollar yen's just absolutely clearly getting ready for a little bit of a reversal. Just clearly overbought. The BOJ has been just adamantly dovish, but they may have to change their tune. I guess she may have more comments on that, but it certainly feels like, I mean, if we go to the 4 hour charts, the whole thing here is this whole 144, 145 level. I think we get to 145, that becomes alarm bells for the BOJ. They don't want to see the currency so cheap because they got to import oil. Remember, Japan imports all their oil. That's very expensive at 145. It really is expensive. So it offsets it. They may earn a lot of money selling Toyotas, but they're not gonna. They're gonna give it all back by paying for oil. So they're not gonna be happy about this. So I think Kathy is right that there is a chance for us to go back to 42s, maybe even the 140s on a kind of a risk aversion type of basis. So that's sort of the view of the markets. The basic view of the markets is we're still mildly negative equities. We are constructive crypto, mildly negative gold, or pretty much negative gold, and constructive oil underneath the 70 mark. That's sort of like my view. And then these sort of tactical trades in cable, tactical trades in yen would be interesting ideas for the week.
Awesome. Well, you haven't missed yet, so we'll check in on it next week.
I'm good on the 1 minute chart. That's my specialty.
Awesome.
Yeah.
Hey, Kathy, would you show us your heat map?
Absolutely.
Always a fan favorite.
Let me stop sharing so she can grab the screen.
Okay.
Okay.
So here we are. Okay. All right, so let's take a look at the heat map. We had our own BK webinar this morning, and there's a little bit of confusion I think I want to clarify here. So first of all, I am bullish dollars this week. But, you can see here that I'm bullish dollars and I'm bullish Japanese yen. So, some people were confused as to what that means. And, earlier Boris just mentioned that I talked about how I'm bearish dollar yen. So this is all about relative bullishness. I'm primarily bullish dollars against the euro, sterling to some degree, the Australian dollar, and some of the other currencies. But I am more bullish yen and Swiss franc than I am dollars. So when you have two signals that are kind of contradicting, you've got to listen to the details, either through this live stream that we're doing with you, or sometimes we did it through our BK webinar for our members. So while I'm bullish dollars against euro, sterling, Aussie, CAD, I am actually bearish dollars against the yen and the Swiss franc. So the reason is because, first of all, we have less in the way of US data this week until the very end of the week, which is on Friday. We have more data from the other countries in the beginning and the middle of the week, particularly the Eurozone and Australia. So I think that what we're going to find is some of the data, particularly from Australia, is going to be softer, showing that CPI is going to be weaker, as well as retail sales. This morning, we had weaker data from Germany with the German IFO report disappointing. That's probably going to show that business confidence is going to lead to weaker economic confidence, which is coming out later the week, and also weaker inflation data from the Eurozone. I also talked about how I'm bearish the markets in general, so that should weigh on what we call the risk on currencies like euro and sterling and Aussie. So I'm bullish dollars, but only against the other ones, not against the other green ones. In terms of euro, there is more data from the Eurozone this week than there is from the US. And that's why, I think, the inflation data, the jobs report from Germany could be quite weak. We saw a contraction in the manufacturing and service sectors from the Eurozone last week. The numbers were very terrible. And, in general, I think euro is due for a correction. Sterling is really interesting. Sterling actually had a double zip sell signal this morning that worked out really, really well. That's my indicator, the zip indicator. But
we converge.
But the fundamentals are not negative sterling. The BOE last week surprised with a big 50 basis point rate hike, and they said they're going to do more. And the retail sales data last week was good. And this week really have nothing going on for the UK except for some final GDP number. So sterling fundamentally should be trading higher. The market's pricing in 70% chance of another rate hike next month, but it's not performing well. And that is where it's important to align make sure that you wait for the signals that are aligned with your technicals and fundamentals, because fundamentals is saying one thing, technicals is saying another. So it's best to step aside until you get more clarity, like some sort of really bad news from the UK or the technicals turn positive. The Aussie, on the other hand, has been a pretty easy trade. We made money last night selling Aussie Kiwi, and Aussie in general has been very weak, and that's due to the weakness that we had in the PMIs, and just unlike all the other countries where another rate hike is priced in, and the expectations for another rate hike have actually increased. For Australia, because of all the disappointments we've seen, rate hike expectations have actually dropped to 30% for their next move. So the fundamentals are confirming the technicals, which is why Aussie is doing so poorly against dollar and euro, and that's where the opportunities are. CAD is also really interesting. I'm bearish CAD. I think that the oil prices are below 70. It looks like it wants to hang out there. The Bank of Canada pretty much suggested that maybe they're done with tightening. The inflation data hasn't been that great. Retail sales data has been good. So this week's inflation data will be very, very important, because if that's bad, which is coming out tomorrow, then I think a bottom is set in dollar CAD. If it's good, then maybe I'll hang on. But if it's weak, I think a bottom is definitely set in dollar CAD. Kiwi was the best performing currency today. Really, just moving on Aussie Kiwi flows. But Kiwi has been doing better than Aussie. And the trade that we had last night where we made money in Aussie was actually shorting Aussie Kiwi, because Kiwi data has been pretty good. Kiwi dairy prices, PMIs have beat, and also Aussie Kiwi has been in a downtrend. And I'm also bullish Swiss franc and the Japanese yen, because I am bearish stocks, which I think will lead to some sell-offs in the Swiss pairs and the yen pairs. So that's basically how we shape up for the coming week, and a lot of it is aligned with the technical story, and it's just a matter of staying within the trend or waiting for the technical setup to move in the direction of these fundamental biases.
Awesome. Well, thank you. Thank you. So, and what are we looking for PCE? Are we trading it or are we holding off for more information?
Well, it's end of the week, Friday. Usually, we square up by that time. But I do believe that the PCE could be softer, and because in general, inflationary pressures seem to be softer. And if that's the case, we already see dollar yen start to lose momentum. Then you have the fundamentals maybe aligning itself with that, and that could maybe lead to a deeper pullback in dollar yen.
Excellent. Awesome. Well, guys, again, thank you so much. Both of you, very detailed, great explanations on a moderately slow business week, but we've got a lot of stuff to digest.
We have some questions, Corey.
Yeah, absolutely.
So here's one question. Will currency appreciate or depreciate when GDP is negative, even if the central bank is raising interest rates? Can you explain? Well, I mean, that's a really good question. That's what people fear, which is that if the central bank is raising interest rates and growth is negative, that could lead to a recession. And that is part of the reason why sterling's struggling a little bit. And it's part of the reason why last week we had we had more of a sell-off in euro, because that was really one of the big stories. But yes, the currency can fall when the central bank is raising interest rates if the market believes that it poses a risk to growth. Here's a question for Boris. Does the bounce system still use the multiple entry size strategy after a loss?
Yeah, it does. It does. We've kind of refined it to a really sweet spot of exactly how many we go into, exactly how, and yes, it does. And it's been working very well. As I said, we're up 5% in a week. Hopefully next week we join you, we'll be close to the 10% target, and that's the whole point. Is that the balance strategy is really optimized to help you achieve the prop evaluation targets with minimal amount of risk.
5% a week means that you could hit your Surge 10% target
Don't grease me.
2 weeks.
That inventory management that Boris has works like magic.
Yeah, it is. And it's a lot of it obviously has to do with size, scale, structure, time of day. The critical thing, as I said, is it's always the what, when, how. I've talked to Corey about this till he is probably blue in the face.
No, it's important.
But it's absolutely critical. The most important thing is you need to find the right instrument for the strategy. Then you got to use the right time for the strategy, and only then you apply the strategy. The strategy is the least important in the sequence of what we do. It doesn't mean it's not important. It's just that it's the least important in how to achieve the profits. But everybody always thinks it's the reverse. As long as I have the strategy, I have it all. No, the strategy is just the starting point. The actual hard work is choosing the what and the when, and that's what we specialize in the room.
Excellent.
Yeah.
Awesome, guys.
All right, guys, we'll crank it.
Well, again, thanks so much. We'll see you next week. Hope you guys have a very good week, and good luck to you in your trading.
Thank you.
Right,
Don't
thank
worry,
you so
guys.
much.
We'll see you.
Thanks, guys.